Hello traders, Nick Shaheen here looking at Twilio. I haven't traded in a while, but I do remember getting heat because I had sold some puts at 25 before an earnings report a while back, and then it collapsed because they lost Facebook or whatever the heck it was, a giant client. And it fell into 25, and recently it was at 150 and people were pumping it. So I had the question today, what's it look like now? So this is Twilio. I don't really know what the company does. I'm just talking from trading. So trading perspective, which levels matter to me. And this is not a recommendation by any means or a knock against the company, because this is strictly based on the chart. I would apply it to whatever fundamentals I have with it. I can tell you that the range is tight and it is at pivots. So usually when those two come together, something is going to happen. And there are some things that are going for the bulls here. The fact that first of all, it's quite a bit off the highs. Sorry, it's Friday. Oh, that's new. And 40% correction off the highs. And it's Friday the 6th, December 6th, and it's been a long week. Good week, though. So obviously a better time to look at it from the long side. It's tough to start shorting it here or to panic out of it here if somebody stayed into it all this long. And I'm going to try to look at different time frames. So this is the time frame that most people look at. You can see that I've tracked it before, and I said somewhere around here it was tight, ready to move, but I didn't know which way, so I pointed both ways and both came true, which is unusual. And then here I said it must hold, and then it didn't. And I said if it doesn't hold, this would have been, because this is one line, it played out perfectly, and then it repeated the scenario here. So the white pattern repeated into the red, I'm going to call it reddish purple pattern down here. But this was also looked like it was a basing opportunity, right? Lower highs, not still lower lows, but not quite. So the difference here is we have 3 or 4 higher lows, which you could argue that it happened here too. So let's slice it and dice it. First of all, I can extend that line all the way down here, and but I'm going to draw a fresh line so we would have a fresh conversation with it. So I would remember that I did this, that. Okay, so here we go. This should happen. I'm not going to draw a zigzag, but I usually do. It would fail here first, then here, big time. So I'm going to just do this and leave it at that. Usually I draw something like this. Conversely, the ascending trend line suggests that they can redo that. And I'm going to stop here. Again, usually I would draw something like this one, but I'm going to stop here instead of drawing this. So now you can visually see that the green lines say the range is tightening. And every time, most times that happens, there has to be a relief of that tension. So either a breakout or a breakdown, and I don't know which way it's going to go. I can speculate based on the whole chart. So I'm going to go to a weekly chart. I'm going to zoom out. Same data, and what's going on for the bulls and what's going on for the bears. So the good thing about it is that now we're looking at candles that are 1 week each. It had a run up here and then it collapsed. That's probably when I sold into it. And then it took its time. That's a long rounding bottom to get back to it. And then they took their time and they broke above it, right? So this was the neckline. This is the neckline. They broke above it, and it's perfect that they came back and tested it for footing twice. So this was the Christmas crash right here. This was a legitimate crash for the whole market. Interesting, they didn't set a lower low. They set a higher low. So it's a legitimate support as I can think of. And then boom. So finished an ABC move up there. Not a strange phenomena there. So now they're giving back this much. Disaster, right? No. If you consider the rally, say from here, this is eyeball half of it. Anytime I get a rally and I give back half of it, it's fine. Because onus is on the bears to be able to do a complete hat trick. So they're going to do this probably. That's usually what happens. If nothing substantial happened as far as headlines or whatever to change the thesis. Again, I said I don't know the fundamentals. I know it's expensive, and we'll look at that from a traditional metrics, but I don't know how its business and how its competitors are lined up with regards to value. So that's not on me. So here we go. We have a solid support here because it's been tested during the Christmas crash in 2018. We have another neckline of sorts around here, and they held above it. So that's why I have these two lines here. At some point, somebody asked me something, and I put triggers. So I would probably chase it if it breaks through the line, and I would short it if it goes through here, but I'd be surprised. But if it falls through here, I bet it finds strong support in the zone. So when I'm a bull and I know there's a floor below my stock, I'm less likely to be shaken out and panic because I know it's shallow. So in this case, that might be the mindset. So these are the two orange lines I just talked about that would cause me to chase one way or another. They're strategically placed. Some people like to chase breakouts in trend lines, like chase the breakout as soon as this trend line breaks. Like they stop setting at lower high. So they chase it as soon as it happens. I prefer chasing ledges, levels. So to me, this was a prior big failure level right here. They tried to hold it, and then into earnings. They took their time to get back to it. It's a big rally. So if you bought the earnings dip, kudos, that's where people get out. Those who were stuck here that bought it before the earnings, now they're even, they sold. Now what happens? So you can see now visually this looks like the cup and handle right here. Cup and handle, or at least the neckline that's being assaulted. If the bulls will go up above the neckline, they will test it for footing and then take off and attack the next level up. So there's a level here, a gap up to here. That's a major failure here. Here being 118, 119, let's call it. These giant candles here on I don't know what, but that's another huge level right there, worthy of mention. So, oh, okay, I already did with that white line. So never mind, I don't need that. So I have to look at all of these. First, where's my trigger? I don't know which way it's going to go, but I know which lines I want to trade. So if I'm a fast trader, 94 would start to worry me and say, okay, maybe I can short it until 88 and then see what happens below that. Okay, so that's if I'm a short-term trader. So I'm going to zoom into a 2-hour chart. Now every candle is 2 hours. Same zone, orange line, orange line. Now you see why my 94, the number came from this. This is a nice rejection of the bottom, but nonetheless, this is a few bucks of fast trading shorts. I think as it approaches 100, this one is pretty interesting. That one candle right here. I think this will give this candle right there. I have my finger on it. It's to the left of my white plus. It's an indecisive doji. It looks like my cursor plus sign, right? Because they opened, they tried to rally, they failed at 100.5. They tried to sell it, they failed. They said, you know what? I have no idea which way it's going to go. I'm going to close it about where it opened. That's indecision, and they're still stuck there. So here we are at indecision. So the edges of that candle were important. So I would take the really short-term trade is 100.6 versus this tail right here, 96.20. So those are the really sharp candles there that I would look at. But that's not my style. I don't like to trade that fast. I'd rather find something that's either bottoming or toppy and take a directional bet on it. Or if I see a range-bound trade, I like to sell the ranges, meaning like a strangle of sorts with, so you could call it an iron condor. Or bet upside, like if I know it's going up, I would want to sell risk below it, hopefully on a bad day where everybody's chasing. So Twilio value, it loses money according to this. The PE is totally negative, and it sells at about 20 times sales. That's pretty steep, and the technicals are not that great on multiple time frames. So you think, okay, it's 40% or 30%, whatever I said, off the high but according to what I just looked at, it's still frothy. So if the poop hits the fan with the whole market, this is not going to be the stock they're going to hang on to. When markets are really scared, they don't hang on to froth, and they don't buy froth. So maybe if I were trading it, I would wait for these breakouts, the mini ones here and here, or wait for the orange ones for bigger swings, or for the medium term ones where one is at 89 or 90, whatever I said, and this candle right here, or just sell into fear when the fear happens and I have a good grasp on why they're wrong. Another important point is this orange line right here, the level where it's highlighted, 110.54. So this is 1 year's worth of data. And according to the actual volume, all the buying and selling for 1 year, this was the busiest. So you could argue that this is where buyers and sellers thought that they had the upper hand. So they both were active. Buy, sell, buy, sell, buy, sell, buy, sell. So on the way up, it's not going to be easy to break through it, because all those busybodies are going to get added again. That's why this ledge, which happened to be a ledge, is going to be pretty strong resistance once they get to it. So keep that in mind. So yes, they have strong support, but they also have high resistance. So maybe I go out in time and sell the Iron Condor without including the next earnings report, which is in mid-February. So maybe I would look at a January or late December Iron Condor to see if I can stay outside of there and collect the premium. Maybe. But I have not looked at the premiums. But the point is, the chart looks like there are good levels that one can know and trade accordingly. So if I'm long, I'm not panicking out because I stayed in it. Or if I bought it down here, maybe I trim some. I don't expect a lot of downside without a market correction or a specific headline out of the blue for it. And if it rallies, which it could do one of these to target 115-ish, I think it's going to run into a lot of problems around 110. So that's the long and the short of it. For really active traders, they can come into 5-minute charts, and then it's a whole different ball game. For that, 99.5 would be really good news, but look at that last failure here. So anyway, we can do this for hours.